Hi there, welcome to Grain TV. It is Thursday, February 9th, and it was a crop report day. We'll get to those data here in a second, but let's take a look at where the market is about 10 minutes before the close. In Chicago, corn off 3/4 of a cent, beans off 7 3/4, and wheat, the darling to the upside, gaining 9.5 cents, getting close to that 443 mark on the chart we've been talking about. Let's start first with USDA export sales that came out this morning. 7:30 Central Time. These numbers were unimpressive for the most part. The only one that showed better than expected sales was wheat, coming in at 527,000, besting expectations ranging from 300 to 500,000. Corn coming in at a decent 971, but still not anything above expectations. And beans on old crop coming in at the low side of expectations, and new crop coming in also at the low side of expectations. So that's how we started the morning. The morning saw beans trading up in the 1060 range on front month March going into the report, but once we got the report numbers, which we'll delve into here in a second, beans really sort of took it on the shorts, losing 15 cents at one point, down to 1045 before sort of recovering going into the close around the 1051 mark. The news in the USDA report, or the data in the report, was mostly friendly to wheat. Not very much change in any situation on beans, and somewhat supportive for corn. Let's delve into, first of all, U.S. carryout numbers. Corn, they dropped carryout by 35 million bushels versus last month's numbers. This came from better ethanol and industrial use of corn. No change on exports. Beans, they left totally the same. And wheat, they bumped up exports by 50 million bushels as a result of sort of shifting global production patterns we'll talk about here in a second. Let's take a look at world carryout numbers, world ending stocks here. Again, no change really on the soybean front. They did shave a little bit on world carryout of corn, and they dropped wheat carryout by nearly 5 million metric tons. That was largely a result of a 3 million metric ton drop in India's production. There's been some stories about that where they are seeing yet again another year of sort of poor crop conditions. It's not a game changer for wheat, but certainly it is a move in the right direction. We continue to have very, very large wheat stocks, but for once we're seeing the dial move to the lower side of stocks versus the upper side, which got the wheat market moving higher today. On the South American data, this is what everyone was focusing on going into the report. USDA really sort of held pat on their projections, didn't really change up anything, choosing instead to kick the can down the road and see what they will see as those crops get harvested. In Argentina, they came in higher on beans than what traders had been thinking, coming in at 55.5 versus 54.5. They left Brazilian beans unchanged to 104, even though a lot of analysts are saying 105 to 106 is a more likely outcome for Brazilian beans. And corn, they pretty much, in addition, kept Argentina's corn crop higher than expected and their Brazilian corn crop lower than expected. So overall, South American numbers were not dramatically different than what people thought, and didn't really change the perception. So we're sort of left in limbo here, looking for more confirmation as Brazil and Argentina start to get into harvest, especially Brazil, and also as we see the ramifications of our export program once those countries start to become dominant exporters in the world market. So that's really sort of maybe disappointing to those of you who may think this market needs to go down. Certainly the bulls have been pushing it up here at the beginning of the week. We'll see if they can carry it out the rest of this week going into Friday's close. Let's take a look at the March wheat chart in Chicago. We talked about this being a double bottom scenario for the last month or so, and the potential to get up into this 443 range that was the high established back in late October. And as of today, we're just a few ticks away from it going into the close around 442. So it seems like we're going to fulfill that objective. I don't know how much more upside we have from here. Certainly the USDA numbers were friendly to wheat, but keep in mind this is still a market with massive carryouts. So getting ahead of the rally may be something you don't want to necessarily do at this juncture. We do have continued dryness in the southern plains. The drought monitor this morning did show Oklahoma slightly higher in terms of drought ratings Kansas was not materially changed from last week's drought monitor numbers. So again, it is somewhat supportive that we have lower stocks, we have dryness in the plains, but that can all change. Certainly the dryness can all be wiped out with a good rain in April. And from our meteorological folks at Planalytics, they suggest we are likely to see better rain potential in that April-May window as the crop needs it for improving production. So that's all we've got for today on Grain TV. As always, if you'd like to learn more about how we can help you in your own grain trading situation, visit us online at grainage.com. Have a great day. We'll talk to you on Friday.